highest conviction stocks, Oscar Health is reporting earnings in just 2 short weeks. And with that, I felt like I should make this video going over exactly what I'm going to be looking for in Oscar earnings, what I think would actually get the stock to move to $40 or more, and what I'm doing for the next 2 weeks leading up to earnings. So what's up, guys? Welcome in to the RonnieV Show. Go ahead and do me a favor, smash that like button, hit the subscribe button so you don't miss any updates on Oscar, Zeta, or any other my high conviction stocks going forward. So let's just jump straight into it, guys. Let's talk about Oscar. And like I said, stick around to the end of the video where I talk about the levels that I'm looking at on the charts and what I'm doing this next 2 weeks leading up to the earnings. Let's jump on over here to the Substack that I just dropped so we can use the visuals so we can make sure that we're following along on what I'm looking at for Oscar Health's upcoming earnings. Now, Oscar Health has already been on a massive tear. It hit a low of about $10 to $11 earlier this year, and ever since then, it's been on a ripping rally to over $30. And now we sit right under $30 currently today, but nevertheless, we've been on a massive rally and Oscar's finally seen that price appreciation. And it didn't just give it all back like it's done in the past, and it broke out of this solid consolidation that it was doing for about over 2 years. But that's not what we're talking about today. Today, we're talking about what's going to happen with these earnings and where could the stock price go from here. We've already had the run up. Now what's going to happen? Are we going to give it all back, or are we going to continue our next leg up with stock appreciation? So what do we have to know? First, we have to understand what earnings are actually expected by analysts. So analysts believe that EPS on a GAAP basis is going to come in about 36 cents, and revenue is going to come in about $4.74 billion. Now, again, stick around to the end of the video. I'm actually going to unveil exactly my price or my predictions for earnings as well. So, more than an insurance. So, who is Oscar Health? Oscar Health right now is a health insurance company, primarily in the ACA, Affordable Care Act, brought on by Obama. And they're primarily a health insurance company in that sector. But the funny thing is, everybody thought this company was going to go belly up because ACA credits were basically going away and they haven't been renewed. Yet, the funny thing is, because health insurance got more expensive and because they are a dominant player in ACA market and everybody else is leaving, they were able to capitalize and grow memberships at an astonishing rate last quarter and for this year and year over year. So that's who they really are. They're an ACA health insurance company. But I do believe they are going to build into and are currently building into so much more. So right now they have ACA plans. And Wall Street also sees medical loss ratios, premiums, and regulation. That's what Wall Street sees right now. But what they don't really understand is how members, this isn't just a one hit, like a hit and run. This is, they're going to consistently grow their members from this year forward. But Wall Street doesn't believe that yet. Wall Street just believes this is a one and done year, and then next year the members will fall off. They also don't understand their care navigation. The fact that Oscar has this AI built into its app to help navigate their clients into the right care, get the proper referrals to get you to the right primary to get you seen for the issues that you have, whether it's knees, toes, shoulders, elbows, back, whatever you want it to be. They are going to get you to the right care instead of you having to figure out who you're supposed to go and see. Digital care, they're also really going into. Obviously, we've seen mental health digital care. We've seen mental health go into this where you don't have to go into an office with white noise at the door and then talk to a therapist in person. You could do this all online now. And they're also really ramping that up inside the Oscar ecosystem. They are also collecting data like any other company is on you, the user. And we have ICHRA. ICHRA is the individual job markets, right? So basically, if you are a driver for Uber Eats, if you are a self-employed, if you're a self-employed person, if you're a business owner, so on and so forth, you can basically enroll through ICHRA, and this is going to get you, this is just another growth aspect for them. It's very, very small right now. They still have a lot to prove in this area, but it could be something as time goes on where people are buying individual care instead of group care through everybody else. And then finally, we have Lucie. And this is one of the most bullish things that Oscar has basically that they're starting to pivot to. Lucie is going to be possibly an amazing thing for Oscar. Why? Because Mark Bertolini has always wanted a free and fair health insurance marketplace. And Lucie is just that. Lucie is where any health insurance company can sell their insurance, their health insurance to anybody. So the insurers can all go to Lucie, the marketplace, Lucie Marketplace, and sell their insurance. And the customer, the users can all go to Lucie and shop health insurance. It is beautiful, beautiful. And if they continue to grow, if they grow Lucie, then you're going to see margin expansion. You cannot just price this company as simply a health insurance company. You need to start pricing this company as a completely different beast, because with the margins they would see from running a marketplace for all health insurance companies and all health insurance users, like insane guys. And they also have ties into the Trump administration and the current presidency right now too. So that does play into possibly them being the marketplace and getting full approval through the government as well through this. So yeah, guys, there's a lot of things to be bullish about. And this, I don't believe this is just an insurance company. Of course it is right now, but I believe that they could grow into something like a healthcare operating system in their early days of that. But let's jump now into, talked about beyond insurance. Let's talk into the 5 earning signals, right? Let's talk about the 5 things that really matter this earnings. Membership. So I don't believe they're going to grow members. I actually believe their members are going to deplete a little bit, but they came in with such a huge number to start the year. And then they were guiding like, okay, first half of the year, we're going to lose some of these members. But in the first quarter, it was way less than they expected. And now this quarter, I think it'll be the same, way less than expected. And overall, still having over probably like 2.7, 2.8 million members. Massive. So I believe membership will be good still. They won't lose as many as they even expected. But it's a key pillar that we need to be looking at going into this earnings season. If membership drops off more than they expected and that Wall Street expected, that could be a negative thing on the stock. Medical loss ratio. This is out of their control, and this is why 2025 was supposed to be a very profitable year on EPS, net income, so on and so forth. But medical loss ratios across the health insurance board spiked up. And medical loss ratios is basically just meaning that, think of it like this. When you go, so you're paying for insurance. Insurance is going to cover your health insurance. It's going to cover your bills, your healthcare bills. But when things get a whole lot more expensive with healthcare, and there's more people going to the doctor that year, more people getting more surgeries, people getting XYZ, medical loss ratios go up, meaning that health insurance companies now have to pay out more than they expected, right, for that year of health insurance. So basically, think of it like this. You're paying your health insurance company, and they're foreseeing you having only 1 surgery this year, but now you doubled down, you had 2 surgeries this year. Well, that's going to impact the medical loss ratio. That's going to impact overall how much money they make that year. So they're really because of medical loss ratios across the board, health insurance companies, it was elevated. So that was a big problem for them. This year, they've come back down to the mean. They've regressed back down to the mean and the average. And so now we're starting to see things smooth out. And that is why we're seeing more profitability out of Oscar. Next is EBITDA. We want to see increasing EBITDA. We want to see 2026 guidance. We would love to see a raise on 2026 guidance of either EPS, revenue, or both. And then finally, I want to hear commentary around how's ICRA going? Are we seeing increased growth in the ICRA marketplace? Are we seeing footholds in the ICRA marketplace? Are we seeing states starting to really come on board in the ICRA marketplace? And then also Lucie. Let's hear more about Lucie, Mark Bertolini. I want to hear more about Lucie and if other health insurance companies and if the markets are actually, looking at this product like, yeah, we would love to have this product overall. So those are the 5 things we're really going to be looking at. One of the things, like I said, was members, currently around 3 million members. Like I said, I do believe that'll tick down a little bit due to, just a bit of a pullback, obviously, like they're expecting, but I don't think it'll be as big as they expect. I still believe above 2.8, 2.9 million members is what we can look for. And if you want these charts and everything like that, you can go to valuesnapshot.io. This is a site that I created. This is everything you need for your investment research, whether you want to run valuations, run projections, see how the markets are doing with market briefs, see market seasonality, so on and so forth. You get a 7-day free trial, that link down in the bio below for you. So Oscar, EBITDA, massive EBITDA explosion, 711 million compared to 301 million the year before. I believe they can come in around, 400 or 500 million this quarter, which would be a huge move from their negative 221 the year before. Profitable growth, this is how they're really going to drive profitable growth, is other things that we need to be looking at during the earnings call. Like we said, more members, more data, better navigation, lower medical loss ratios, even though it's not really controllable, but it is like they do need to be able to predict better on what they're going to be for that year. Higher EBITDA, stronger platform, more members, and you see the profitable growth flywheel that is Oscar and what I believe going forward. Now, let's look at what analysts believe. Analysts currently believe that it's a $24 stock, and the bull case for analysts is $35. They were just $30-some not too long ago, but obviously we've fallen a little bit since then. But they have been upgrading their buy targets pretty consistently. And if they come in and crush earnings, a double beat or a massive beat on EPS, on GAAP EPS, then I do believe that you're going to see analysts spinning up those price targets again, and you're going to see more 30s and 40s than you do 20s. And the 16 is just a joke. Okay, so let's jump down here to what I actually believe they're going to do. Now, my good friend AC, check him out at AC Invest over on X. He is a fellow bull, and we will be going live for Oscar earnings in 2 weeks' time right here on this channel. So make sure you, again, like, follow, subscribe, and turn on the notifications bell so you get alerted whenever we go live for Oscar earnings. It'll be in the morning, but you can always rewatch it back, the live stream. He believes I'm being very conservative, and I probably am. But I'd rather be a little bit more conservative here and then have my conservative be blown out of the water than me be overly bullish and get people's hopes up and like, oh my gosh, they're going to do this crazy number. And then they come in a little bit short of that because you just create some disdain, right? Whenever people are like, well, Ronnie's saying like they're going to do $2, like, and then they do like $1.50. And it's like, $1.50 is really good compared to 36 cents that analysts expect. But, if you're following me and you appreciate, my thoughts around this, then you're going to be like, well, why would Ronnie think it was $2? Like something must have been wrong. You know what I'm saying? So anyways, I believe they're going to do somewhere between 55 cents and 75 cents. I would not be surprised though, if they did over $1 of GAAP EPS, which would be a massive, massive beat, guys. A massive beat because, again, they're expected to do 36 cents by analysts. I believe analysts have no idea what they're talking about with this company. I believe they're way off, and they've been way off with this company. Q1 shook analysts. They had no idea that was coming. They were caught way off guard. And that's why you saw the massive price appreciation. This time, they should be a little bit more prepared, but they're still way off guard. Their numbers are still way off, I believe. And I believe they're going to crush EPS. Revenue, they're always iffy on revenue, I'm not going to lie. So I believe they just pretty much come in line, 4.75 billion on revenue. Look, this is like 7 or 8 billion, like around an $8 billion market cap now. And they're guided for like 18 to 20 billion in revenue this year. If they miss revenue, I'm not going to be like, oh my gosh. Like, I care more about the bottom dollar, the bottom line, net income, make sure we're beating on EPS, becoming more profitable. That way everybody can, look and be like, oh my gosh, look at that profitability. This company's crazily undervalued because the revenue is already crazy explosive and the membership growth has already been crazy explosive. So those are my projections. I also believe that they raise guidance for the year. Probably not on revenue, but probably on EPS. Their GAAP EPS, if they guide for it, I do believe they will raise that as well. But those are my thoughts. Again, if you want to see the full article here, you can come on over to Substack, and it's completely free for you to read it. I'll leave that link down in the bio below, and then I'll also be doing one after earnings. But basically, my thesis or my brass tacks, like bottom dollar, bottom line, 4 handle this year if they come in and they smoke these EPS GAAP EPS estimates by analysts. They do it this quarter, they do it next quarter, they do it the quarter after that. We're going to see a 4 handle this year, I think. 4 handle meaning that the stock is most likely going to rise to above $40 per share, and today it's around $29 per share. So that's what I believe. I believe the run is not over for Oscar. I think it is still undervalued, and it's still a great buy even today for me personally. If we jump on over here to the charts, I believe, sure, there's a possibility that we pull back into these fib retracement levels, right? But at the end of the day, in here was the time to really be buying, and that's what I was doing. And then down here was the time to really be loading the boat, as some say, on Oscar Health if you were bullish, like super bullish like I was. And that's what I was doing. I was doing with leaps, shares, so on and so forth. Have I trimmed a little bit up here at this massive extension? Yes, I have, but I still hold a very, very large core position in leaps and shares. And I do believe this company will continue to trend up over the years. And I believe that this, almost $8 billion market cap company could become a $25, $50, $75 billion market cap company. Because simply, if you just look at a company like UNH, which is the leader in healthcare, leader in health insurance, they're a $379 billion market cap. So could Oscar grow into a smidgen of that? I do believe so. So if earnings aren't the greatest, then you can expect a pullback back here into the $20 to $25 range. If earnings are a catastrophe, then we will see this trend down back into $16 to $19. I don't believe that's going to be the case. If earnings are a blowout, then I think we see a move right back up to 33 and then up here and start moving towards new all-time highs at $37 where they IPO'd way back when in 2021. That's what I think. I think overall, like I told you, I do believe they have a blowout quarter again, and that we see a continued move higher into the 40s. So that's what I'm thinking. You want to join the investing collective? You can come on over here. You can see articles before everybody else. You can see all my high conviction buys, sells, trims, everything in my entire portfolio. You can see that all right here, and you can be part of an investing community that is like-minded to you, that we only have one goal. Let's support each other and let's make money together by choosing and investing in high conviction stocks through a system where we're dollar cost averaging and building our positions. We're not YOLOing, we're not FOMOing, we're not fear, uncertainty, and doubting. We are simply following a framework and trying to build good, solid, high conviction, not 30 stocks, 20 stocks, high conviction. Let's find that conviction in stocks that we love and we think are massively mispriced and build our positions and continue to climb the wealth wall. That is my goal as your pilot in the investing collective. And yeah, so if you want access to that, I'll leave that link down in the bio below. You can come on over and join us and all my friends. And if you actually, I just partner with Peakbot. If you want to completely take investing off your shoulders and you just want to be like, Ronnie, I see your framework. I see your investing strategy. I see how you do things. I just want to copy you. I just want to copy exactly the investments that you are making on a daily, weekly, monthly, yearly basis. You can now do that if you want to. I just partnered with Peakbot and I just launched the I just watched the high conviction investing portfolio where you can literally mirror every single position that I do. Every single buy, every single sell, every single trim, everything. You can completely copy me 100%, and you can do that over here at Peakbot, peakbot.com, and I'll leave the link down in the bio below, but RonnieVShow. And I actually just started buying. I already have the stocks picked out that I'm going to build out, that I'm going to dollar cost average into using the DCA optimizer. I already have everything. I already got my game plan. So I'm just started buying right now. So now there's no better time than to do this. If you want to come on over, copy me. Even if you missed the first buy, is okay. You're going to continue to buy with me on the way towards market beating returns. That is the goal, market beating returns. And over the last 6 years, I've been able to do 57% from December 2019 to June 29, 2026. Don't have this newer month, a 57% annualized return. And then for the past 5 years, we've done 32%. And we're just crushing the markets right now. The markets are doing about 14%. So yeah, that's my show you the proof. I've been able to consistently do it, and that's all ran by Fidelity, those stats. So I've been able to consistently do it through high conviction investing, whether it was through buying Meta when nobody wanted it, whether it was buying Tesla and riding that huge wave for over 1,000% gain, whether it was buying Palantir early, Nvidia, American Express, so on and so forth, guys. But that's enough about all that. Hope you appreciate the video, guys. Hope you got value out of it. Go back and watch it again if you want. Again, my thoughts on earnings, Oscar earnings coming up. I think, again, they'll have a blowout quarter. And yeah, follow along right here on the RonnieV Show so I can keep you updated on Oscar, everything about it, and once earnings drop so you know what's going on with the company and stay up to date. I appreciate you guys. I love you all. Take it easy.